Let's go. GM. Hey everyone.
Hello.
Welcome back.
Hello, everyone.
Cool.
All right,
We got some Discord popping off or messages.
Hey guys,
Yeah.
how you doing?
Cool. All right. Welcome back, everyone. We're back with the banger today. We're diving into real world assets or RWA, and Kiichain is the guest here, bringing something new to the table. So we got on the starlight up joining us, Simon, my co-host, and his Earthify co-founder, plus the Kiichain team, Alex and Daniel. So, hey guys.
Hey, thanks for having us. Really excited to be here.
Hey guys, good to be here.
Love to get some introductions to you guys. So obviously I had the pleasure to meet Alex I met you in Singapore, right? I don't know if I saw you again in Bangkok, but we got to meet in Singapore at a cool little cafe and talked all things Kiichain, RWAs, South America, LATAM, and it was pretty impressive stuff. And so we obviously kicked it off, and it's my first time meeting you, Daniel, actually. But I'd love to hear a bit about you guys. I mean, your background, and then then Kiichain itself. We can start off like, well, what is Kiichain? We can through this episode we can go into Kiichain. We can go into RWAs. It'd be cool to explore like different kind of facets of what you guys are doing in the industry in general.
Yeah, definitely. We can give you like the background, so of really just like how Danny and I met. I'll let Danny give his personal background, but we met 15 years ago in school in Boston, both like traditional finance background and in banking and PE. Danny, I'm from Boston, from Massachusetts originally, but Daniel's from Columbia. We started working together in TradFi in 2011, 2012. We started a first company together, BioSmart, which was a pharmaceutical company out of Colombia. We grew it to 8 countries in LATAM, and people started paying us in stablecoin in 2018. And that was really like our more professional entry point into the sector from just like consumer fans. Because we realized just on an international scale, like what that could do to our like just payment processors and costs, and especially in like emerging markets, right? And so that's what originally got us in. Our like kind of backgrounds in the Web3 kind of crypto space started from a Web 2.5 perspective, just OTC trading and market making. We ran like a $5 million OTC market making fund in Latin America, where we did a lot of like credit extensions, liquidity provisions, different types of market making for mainly stablecoins against fiat. That translated into like understanding, just the whole P2P economy here, like how cross-border payments move, right? Like the value add. There was tons of people who were operating in this space from a Web3 perspective, but like we also saw just importers and exporters, companies like our past company, who that was like just using this as a everyday use case, regardless of what was happening among like crypto narratives and cycles. It was just really constant, steady flows. So we decided the best way to really start to solve for like poor infrastructure in the region and really start like building products for mass adoption was to really start building tech around it. So that's when we built KX first. Mainly building unified APIs, building almost like a central exchange, but for businesses, right? Because that was driving the most amount of like flow and use case. And then a lot of them wanted to get in more into Web3. They want to start tokenizing assets, like really big importers and exporters. We started listening a lot to like our clients. We onboarded over 300 clients. And that's what the inspiration was for really building Kiichain. So, I think like a lot of problems, like just dating back 15 years ago, seeing what investors wanted, like invest in the region, but not, have exposure to like FX risk, moving money. It's just like, Web3 is really just tackling all of these like big problems that we've been seeing over the last, 15 years or so. So yeah, excited to be doing what we're doing now. It's like really coming full circle on the use case. But yeah, we'll pass it over to Danny and kind of have him give his background. If you're still there, Danny, I think your screen went black, but I think you can still hear us.
He might have been tuned out.
Yeah, maybe we just left, but he'll come
my
on.
lighting just went off. I'm trying to figure that out, but should be good for now. So yeah, actually, this is probably a good not a segue, but really curious to hear. Like you just mentioned, obviously, like these payments stuff, and you mentioned LATAM and South America. We've heard a lot in crypto around, one of the biggest product market fits and use cases for crypto is cross-border payments. You hear a lot about like the need for crypto more than ever in developing countries like LATAM. Talked about like, I think over the last few years, there was a lot of talk about Argentina and many other countries that would like desperately needed stable coins, high inflating currencies, many other issues. Can you like maybe touch on, or let Daniel obviously introduce himself too before he dropped out, but touch on more like what are some of those big pain points that maybe people touch on but don't really go down deep into around the problems in these countries and why they really need blockchain and crypto?
Yeah, sure. I mean, I'll answer that question, then I'll pass it over to you, Danny, to give the background. But like, so I think like it really started with, and we saw it when we were operating like just a pharmaceutical business in Venezuela when like they had hyperinflation and you saw tons of users come on to like the US banking networks and then enter into stable coins, right? And so that was like a really big aspect is the inflation model that like there's no multi-currency accounts in LATAM. Like there's not really many fintech type accounts like these like Venmo and Zelle type networks that just allow like free transfer. The banking industry is quite small. There's tons of verticalization and the costs are quite high. So that's like a pretty big, like use case right there. And then the other one is just international payments, cross-border payments. And we saw that with our old company whenever you have to move $50,000 or $10,000 or even $1,000, it's a real arduous process. It can take a couple of days to get, money into these countries. And the cost is quite high, even from like a remittance perspective, a personal remittance perspective, right? And when with stablecoins now, that is happening instantaneously, So like the benefits are there, the user adoption and demand is there at both like the Web 2 and Web 3 level. But what's missing is a lot of like really important infrastructure that makes this operate seamlessly every day and very smooth. And the demand is like really massive, right? And so some of the problems that we're still facing are like, one, how do we integrate this technology, right, into like more of the Web 2 sector? Because you have so many businesses who want to tokenize assets, who want to start accepting more payments on chain, who want to bring their revenues on chain, who, then can go get financing, right, from an international community because a lot of credit opportunities don't exist, right? And then they're also addressing like the lack of just local liquidity on the local fiat side. So whether it's LATAM or India or Southeast Asia or whatever it might be, still a lot of these problems are evident, and they're not all that different depending on where you go in different countries.
Nice.
Yeah.
I think, yeah. He's okay.
Yeah, Danny keeps hopping in and out.
Yeah, we'll get to him when it's a bit stable, maybe.
Yeah, all good. But yeah, those are some of the biggest use cases that we're seeing right now, and we're just there's a huge demand that's really non-cyclical for a stable coin and cross-border payments. It just depends what the source is. So like remittance is a source, RWA is a source, financial products, right? And yeah, a lot of the friction just comes around that infrastructure.
What does the capture or the penetration that like specific market look like? Because people have been talking about this for a long time, right? Like we've heard a lot of people talk about like, the use case for crypto is cross-border payments. The use case is, all this stuff. But we've yet to really see a market leader pop up, right? Like, maybe I'm wrong. Maybe it's happening. But I guess like the competition to Western Union is people are talking about stable coins being this thing, but we haven't really have we seen that yet? Have we seen like that take over and that market share being adopted? Like obviously we're seeing these LATAM countries using stable coins and using crypto and that adoption growing. But where does that do you see that like transition happening where it's truly mass adoption?
I mean, it's happening for sure, right? So like when you look at like just the remittance industry, which was like 150 billion in LATAM alone, 10 years ago, nothing was on chain or very little was on chain, right? Now it's like, I think we're talking about like around 15 billion per year is on chain, right? And so like we see a lot of these like centralized exchange infrastructures who are moving this volume. So when you zoom out, the trend is clear and the adoption and like the volumes on wallets are clear. I mean, like annually, I think Brazil is around about 100 billion. Argentina, I think a little bit more on just stablecoin volume, mainly USDT, not including other stablecoins, but USDT is the most popular one in LATAM. So the trend is there. The flows are really big. The main issue on the flows is, we're still using banking infrastructure to settle the use case. We haven't like expanded yet into this like more permissionless environment. So a lot of these flows are like being aggregated in the wallets in these local countries. And then they end up going back to like USD sources to off-ramp and balance fiat flows. So it's like when we get, wallet movements, right, on stable coins, a lot of times the biggest demand is trading against local fiat, because people are either leaving their fiat or they're coming back into their local fiat, right? And so that's putting tons of pressure on like traditional banking systems, and we need to kind of democratize that more, right? Which is one of the use cases that we're working on with like some projects building within our ecosystem, is taking these like FX desks away from banks and putting them on chain via dexes, right? Where anyone can create these liquidity pools and like anyone can swap in from local stable coins to dollar-based stablecoins.
Sorry, I was muted. Tell me about the RWA component, right? So these businesses are like wanting to tokenize their assets on chain. Where does that come into the mixture? And then we'll delve obviously into Kiichain and the different components, what you guys are doing. But so you've obviously remittances, payments, USDC, payments, obviously really powerful, enabling someone to send money to their grandma that's still in Colombia without having to go through Western Union and get ripped off. People not having to sit in, an inflating currency. But then where does the RWAs fit into the picture? So you talked about like these companies wanting to tokenize assets on chain. That's quite a topic popping up around like lately as well. RWAs, real world assets, ability to tokenize gold, commodities, real estate, range of industries. Where does that come into the picture around like that adoption and that demand?
Mainly from like democratizing access to certain assets, right? So like on the real estate local side, huge demand for assets locally, and then from like financial products abroad. So like a lot of users want tokenized equities per se, right? Or they want tokenized Apple stock, these type of financial products, but they can't have access to get it. So those are like two of the, I'd say, bigger use cases that we're seeing, like local assets that are really valuable. They need liquidity. There's like huge value there. They want to come on chain and then, and interact with more of like this global world. And high value assets or assets that have high yield or high producing. So like a good example from that, for instance, is like, really safe commercial real estate projects that have attractive yields, that can be tokenized. Users or investors might want to have access to that, but like they don't want to take the risk of like local fiat. So like when this is built in on chain in local stablecoin, then they're like way more advantageous to participate in that asset, right? And then fractionalization is a big theme. So a lot of users can't own, full real estate projects. So by, tokenizing that and then fractionalizing it, more users can get in. And then the same can be said for just like US, equities, ETFs, these type of like safe yields, nothing too crazy from abroad. They want like the big, well-known brand name type projects. But like even before NVIDIA did like their stock split, the stock price was trading over $1,000. Like that's a heavy ticket for a lot of people in emerging markets. They want to buy $50 worth of that, right? Or as less or as minimal as one USDT. So those tend to be like what we think is like the best use cases right now. And the good news is that, like, again, a lot of this type of flows are non-cyclical. So like they're pretty strong, during, or they're equally strong, if not stronger, in our crypto like bear markets as they are bull markets.
Makes sense. So I see this flow, and then if we can like tie this into Kiichain, is so it starts with kind of payment, starts with like this whole idea of USDC or US dollar stable coins in emerging markets. And then it moves on to like maybe those same users or the same kind of an extension of what this is, which is the RWA component going, okay, it's not just remittances, payments and stuff. It's actually access. Maybe someone in Colombia doesn't have access to Apple, to participate in Apple or NVIDIA or all this sort of stuff. And so you're sort of expanding out this branch of access to blockchain and so sort of trying to put the puzzle pieces together for Kiichain itself, of where it ties in between like obviously the payment rails and the RWA side of things for you guys. But obviously we've got Daniel back, so maybe we'll let you introduce yourself, Daniel, and then we'll dive into like where this all ties together through the key ecosystem, Kiichain, and all these components.
Absolutely. Can you guys hear me okay?
Yep.
My name's Daniel Arenas. I'm the CEO of Key Global. Like Alex mentioned, we met in college about 15 years ago. Pretty good friendship we sparked from there. We got into traditional finance early on. And then, me on the investment banking side, he was more on the private equity side. We started several businesses, especially here in LATAM. And as he was mentioning earlier, we started to get a lot of interest in the crypto space and just in the block space in general. And what we realized was we just saw that the market wasn't really growing, and that the local players were really waiting for like bigger companies to come in, which it tends to be like the pattern. But when we would go to international conferences and start talking to the community and just the market in general, what we started identifying was that the international players were looking for a regional player to emerge who they could partner with, because of the way the market is here, and it's its complexities because of culture, language, and just the way that Latin America operates, being a high context culture and all that. So what we realized was that there was a bit of a gap there, and there was really an opportunity to build incredible blockchain infrastructure. And what we wanted to do was we really wanted to build something innovative and something, of the quality of like the first world, and really bring that high tech aspect to the third world and to the emerging markets. And specifically, we wanted to start with LATAM. And what we said was we have our global focus is our global strategy is our regional focus. Right, because what we've been able to do the last like 4 years, really building everything out in LATAM, is really emerge as that strong regional player with the rails, with the partnerships, and with the access to market, so that we could be that strong partner for the international companies that are looking at LATAM as a very interesting emerging market, right? Especially because when you see LATAM in general, the adoption rate in cryptocurrency is very high, but the adoption rate for tokenization is significantly higher, many multiples over. And a big reason we saw for that was because most Latinos, they save in real estate, they save in hard assets, right? And a lot of those assets are just there either for savings, or they want to do some sort of growth or some sort of project. And unfortunately, the market in LATAM, because of the protectionist culture of the financial sector and the archaic structure of the banking sector, right? There's a significant lack of liquidity in the market, and a lot of these assets and projects and opportunities have kind of just been, frozen in time per se. And they realize that if they want to access them, they need international liquidity. And on the other side, the liquidity providers, investors, holders, different business groups internationally, on and off chain, are looking at LATAM as a tremendous market to be able to acquire these assets with the ease and simplicity of tokenization. So that all kind of really started coming together for us, and we started growing from there. And the vision for what we could do in the region really started to expand from there, and that's where we are today.
Wow, that's super cool. Really cool story, and it's an amazing it's amazing that you guys already built like these connections and these roots in a market, and you're able to like really identify some of the core trends and problems in those markets, and really finding that fit between blockchain and what the market really needs. And I think the timing's pretty good as well. It seems like a lot of people are talking about RWAs. The rise of tokenization on chain has really, really grown. And we're seeing, the Ondo finances and a lot of like these kind of trends happening in the space. But yeah, market specific, especially focus is pretty cool. So, I mean, that ties us into really Kiichain, key ecosystem, the things that you guys have been working on for a while and things you have built. So break down for us the different components of this ecosystem. I know you've got like KeyX, you've got the chain. So how does this all work? Where do all the pieces fit together? And I guess where are your main focuses? I know there's a couple of things going on, and the idea is for Kiichain, I believe, to be the blockchain for emerging markets and RWAs. But how does it all tie together, and how does that roll out?
Yeah, that's a good question. So like the focus for, like what we run is we run like layer one infrastructure, right? And, we're building tools and modules within the chain that really support what we think are like just the best use cases for emerging markets. And then the main application that we run, like our flagship application, is KeyX, right? Which is essentially a hybrid. It started off as a full centralized exchange, turning and morphing into a hybrid centralized, decentralized exchange, right? That will communicate with like our DEX in the back end. The reason why we went that route, right, is because like we have crazy liquidity imbalances in emerging markets, and you need the centralized component to rebalance different liquidity pools or rebalance positions frequently, right? So like in Argentina, for instance, like the demand really is like, selling of local currencies or assets to buy into foreign ones, right? That's the unbalanced demand. In Colombia, it's the reverse because of like high exports and because of remittances. You have tons of people who are selling stables and entering in, right, to local fiat. So you need that you need that centralized party still, right? Like to kind of rebalance those positions and to help market make. But at the same time, like there's a tons of, products that we can on the RWA side that we can bring over that can, trade finality can be on the DEX, right? And we can kind of democratize that process. Also, from a user standpoint in emerging markets, like they're still not getting managing your own keys. A lot of the majority of users, so they want this like familiarity when they're interacting with these type of applications that is very Web 2, and we can just use account abstraction and really cool tools on the back end in order to give them access to these DeFi products. So that's like the main infrastructure and apps that we're building, but we're also working really closely with like a handful of protocols who are building, on this network for these use case products, whether they're like tokenizing from abroad and want to integrate into, our app chain or into KeyX, whether they're building outstanding protocols, like we're working with a separate DEX that just wants to be the FX swaps, right? Center essentially on chain, where it's just 20 different stable coins from around the world rather, who are kind of swapping on this. So like, and kind of just to like relate this back to, one of the questions earlier, which was just like the use cases. Like I think a lot of people globally think that like, oh, remittance is the use case for, emerging markets, right? But generally speaking, like the B2B type of import-export market and that form of commerce is about 10x larger than anything on the remittance side. And that's where like the real economic activity is. So when we can build for that and we can solve for it, and we can also solve for the remittance front, like you're going to see really long lasting flows. And lastly, like our hypothesis really is just like stagnant TVL doesn't really do anything for anyone, right? It doesn't really like, like generally speaking, it either needs to yield something very attractively or it needs to transact and swap and move. So like a big focus is whatever we're tokenizing, we want to have like really heavy utility behind it and daily traction.
Really cool. So you mentioned obviously KeyX was actually going to be one of our questions. So KeyX obviously has a centralized, like a SEX DEX kind of experience. What is a core user? Like, firstly, what kind of adoption you've gotten on that exchange, and who's the core user? Is it the remittance user on that SEX, or is it, like as you said, B2B? Is it the big like trading, like the big like import export companies using that? Like who's the target for that specific like
Yeah.
product currently using it? What's the like market for that?
It's mainly B2B and B2B2C, although we have tons of consumer users who can use the platform, and we're starting to build more products for those consumers direct, right? Because we want to really like start getting them on. But again, the focus originally was like, let's take a B2B, B2C approach. And so like tons of import export companies or market making companies or remittance companies who have pre-existing consumer networks, we're just powering their app. They can connect to our APIs, they can source liquidity from us. Like there's a lot that they can do in order to, you know, bring our tech and bring our community and bring these assets that are listed there to those user base. And another big one is like a local banking networks, right? So we have one who, you know, officially signed, who's connecting right to our APIs, connecting to this liquidity, connecting to these ramps, and essentially offering them a lot of DeFi products in the future. Like, you know, the roadmap for these type of like product suites is actually super exciting. We're really pumped about it, because like, you know, a couple 100,000 users from this one banking environment will have access to these DeFi products from other protocols. And the cool thing is, like, a lot of them will know they're doing it, but most won't, right? So it's like, you know, they won't even know they're interacting with like, you know, smart contracts in the background. It's just going to be a very simple, like, you know, Web 2 app for them. And the cost structure will be, you know, a fraction of how you currently have to do it if you want to access a lot of these RWA products.
And people don't realize how much. People don't also realize how much is really happening in the trad world compared to what's currently happening on blockchain. Like people are like, oh yeah, we've got this many users and this much volume and stuff like that. But that's like peanuts compared to like even probably one country in Latam's movement, right? So you look at these, like even these dexes and what's happening currently on chain is such a small sliver of the wider potential for adoption, right?
Yeah, agreed. I mean, that TradFi world is massive. You know, it's like we can hate on the structures and the governance aspect of it, but you can't hate on the liquidity, the volume of the users, right? Because at the end of the day, like that's what we want, right? and the new users over the long run have to come from somewhere.
For sure. Daniel, do you want to add to what Alex said? Obviously, so we've gone from KX, the main user base of that being B2B and B2B2C. Now, how does that tie in, you know, with the RWAs? Where do you kick off with that? Like, where do you start? Is it protocols that are going to be specific, like a real estate RWA protocol building on Kiichain? Is it going to be you guys like allowing people to tokenize these assets? You know, you mentioned FX markets. So there's a couple components here. Oh, dropped out, so you might have to like hold the button until he comes back.
Oh man, yeah, he's having some internet issues. But that's part of this other thing we need to solve for in Latin America.
Yeah. Some deep in network to fix Latam's internet problem.
Yeah, exactly.
But yeah, where does that transition come in? Like, how does that look like from the RWA side and the rollout? Like obviously now you'll have importing export companies using KX. That going through like obviously a DEX on Kiichain, but then the RWA side of things, where does that come in?
Yeah, so like tons of great partnerships from like origination standpoint. So for instance, like, you know, tons of great US based real estate, you know, projects and yield coming from LenderFi, like really good, you know, options for tokenized stocks and equities, right? Coming from, you know, asset issuers in the US, right? Those security tokens. We have really good like relationships in partnerships with like other ecosystems like ZigChain, right? Who kind of wants to source these assets. So from like an international perspective, there's tons of like protocols or either asset issuers or any type of, you know, RWA type of PayFi module that are coming and kind of deploying to our chain. And then on the local side, you know, whether they're like stablecoin issuers, there's tons of fintech apps, right? There's lots of like these wallets, fintech type of blockchain wallets that are very, have a great user base, you know, user bases that have tons of consumers who want access to these products. The products are free, right? There's no transaction costs, like, which is really not typical at all among like traditional banking products. Like there's always fees associated to them in emerging markets. So yeah, like tons of really cool local protocols and other good like lend borrow protocols that use account abstraction, make it really easy for users to come on and get financing. And then speaking to some other exciting ones, like, going into just like the pay file a little bit more, like, access to credit is just a huge issue in emerging markets. Like there's tons of profitable businesses that like have been pre-existing for, 20 plus years. And, by bringing a lot of those like revenues on chain, by creating KYC on chain, by like linking it up to different payment gateways, or even linking it up to like their accounting software, which gets reported to like local agencies, right? You can kind of bring that visibility on chain and then, open up lending opportunities, right? It's like a huge model that we saw in India that worked really well and that we want to bring to LATAM. And we think that would be super beneficial. So yeah, there's like a lot of different ways of just how to access this. Another locals, a few different e-commerce companies who want to like tokenize different just products, like just tokenization of products, so you can then price that in stable coins, whether they're dollar-based stable coins or local stable coins, because a lot of like their cost basis is dollar-based, right? A lot of users don't want to use expensive payment providers. Like, moving money intra-country is a very difficult thing as well, and a very costly thing. So these are just like, I could talk about this for that. I could talk about that specific question for like an hour, but this is like, this is the basic rundown.
Simon, I got cut off when you asked me about the question.
Yeah.
Well, Alex answered a lot of it already, but you feel free to dive a bit deeper into it. Maybe like we're talking about where do you guys start with the RWAs? Like we obviously talked about like the exchange and the DEX. With Kiichain having these modules, labeling people to do this easily. But where does it kick off in terms of like, maybe this is a good opportunity to delve into like timelines or who's starting, how do you get liquidity for some of these asset issuers? I mentioned, there's a couple, companies in the US that want to kind of tokenize, issue tokenized assets on Kiichain, and some local issuers in LATAM. How does this look like from a rollout perspective? When can we expect to start seeing these assets come in? How does liquidity get sourced for maybe some of these assets? Like if, stocks get tokenized, how do we bring in liquidity to ensure there's markets for these, et cetera?
Well, Simon, actually, that's a great question. That's basically the entire basis for our strategy. What we did was we did something very different from what the market does. What we've seen in the market is that in the market, people identify an asset, they tokenize it, and they take it to market. And what that ends up being is basically project financing through crypto, right? Through blockchain. But what we wanted to do was really create an RWA market and really a robust portfolio. So what we did was we took the opposite approach, which is we just reverse engineered the process, right? So what we first did was we went and we partnered with international liquidity providers that are specifically looking to acquire real world assets. And then from there, we start tailoring our offering to them. So after we made several partnerships in Canada and the Middle East, Dubai, etc., right? We had our base for the buyers and for where the liquidity was going to come from. And we really tapped into the network that would be interested in purchasing these assets, right? Second to that, what we focused on was actually going and building a robust portfolio. So not just taking one asset, sending it over, what do you think, so forth. No. But what we decided to do was we were going to create an entire portfolio based on these assets that are going to be large, both in volume and in value, right? And then from there, we could really create something that's complete, that's absolutely complete, and they'll be attractive at different levels and different phases for different liquidity partners that we have. And then the third piece of that is that once we have all of those highly due diligence tokenized and on KeyX and in our RWA marketplace, then we would go and allow ourselves to go make market, right? Because before that, what you can do is you can give some like limited access to the assets. People can sign up to whitelist. Those can give you some good heat zones in terms of like what assets are more attractive to the market and so forth. That's kind of like to warm things up. But what we realized was with LATAM being one of the largest reserves of tokenizable assets in the world, we realized that that's the opportunity for us to really capture that market and put it, not kind of piecemeal it, but really put together a significant portfolio so we could really make a dent globally as a global leader in RWAs. And the split for that, and the way we have it set up is obviously we have the whole system that's permissionless, and that's the future of tokenizing with Kiichain. But for phase one, what we did was we reached out to family offices, large business groups, and funds, and we decided to start with real estate, as real estate is the most directly correlated and simplest way to really connect the use case with the benefit. And it was what we were seeing was in high demand internationally. So in first phase, we went with the institutional side, so we could establish due diligence norms and procedures, right? And we could target the largest quantity of asset holders to really establish like that standard. And then from there, we're coupling that with large levels of technology and significant advancement, whether it's the RWA module that Alex spoke about, or the PayFi module, or a lot of the other interesting partnerships that we're doing that are going to allow for unified liquidity. And then with that tech put together and bringing these assets on chain, we can break through that first wave of assets that we need, both in volume and in value. And that's what's led us to where we are today, which is we have around 5.5 billion in commitments for tokenization from these large business groups.
Nice. So how does that rollout look from, let's say I'm a user in the space, right? Like I'm someone who, crypto user, I hear about RWAs, I'm using Chain, I'm using these other ecosystems, and I hear about Kiichain, and like, how do I participate? How do I, like, what can I expect from a timeline perspective to start see this like really coming to light in the space, to go like, there's some hard hitters in the space around RWAs. So when does Kiichain hit the map? Like, when do we start like really seeing the fruits of this out in the market to the point where people can go like, oh crap, this is really bringing RWA in a big way?
Well, first, what's going to be unleashed is we're going to be marketing these partnerships and all the companies and assets that we're going to be bringing on chain. So first, you're gonna see the news, and you're going to see the announcements that's going to be popping out significantly over the next few months. I would say in the next 6 to 9 months, after you see all these assets coming on chain, partnerships being closed, which is like the phase one of our process, right? You're going to start seeing the tech side complement that. So you're going to start seeing our RWA marketplace start being filled up with different assets, with, like I was mentioning, with limited access to each one, so you can kind of get a view. But there's still going to be some information that we're going to withhold while we build out the portfolio. And then from the projections that we have right now with the flow of assets coming in, because we're getting a lot of traction on a weekly basis, we're expecting in the next 6 to 9 months that'll all come to fruition, and we'll be in a position to actually open market, which will be when you can see the RWA marketplace, but in its entirety with full access. And that'll be, and our goal is to really usher in the new era of RWAs with a high level of due diligence, high level of information, and really like a complete package, so that we make sure, because we're always thinking user first. So our number one focus is that we have high quality valued assets, more than just throwing things on chain that are going to look good. We really want to have a premier portfolio, and operationally, we expect in the next 6 to 9 months we'll be able to make market, and at that point, you'll be able to enjoy the portfolio that we're building right now that we've been discussing.
I think you touched on something really, really important there, in your approach as well. I think like I've seen this in the past. Like RWA isn't really new. There's been attempts at synthetic stocks and tokenized stocks in the past, but as you said, people kind of like tokenize an asset and then expect people are just going to buy it or trade it before there's actually a market that actually it's just kind of like taking the asset, throwing it, and going, hey, why aren't people buying this? And we've seen this like failure pop up many times in the space around like, why didn't Mirror Protocol get a ton of adoption and people bought like Apple stock and stuff on chain? But I like the thought process in your approach where you're finding the market first and the demand before you bring it, like the demand and the supply, before you kind of just create it out of thin air, so that you can have like an actually active market by the time it gets released, right? Which I think is
absolutely, that's exactly the mindset.
Yeah, well, because and also why would you tokenize something if you can already have access to it? Like tokenized equities in like the United States, it makes no sense to U.S. users, right?
Zero.
Like there's no real benefit there. It's like Sure, other than the fact that like it's more democratized or it's like a little bit potentially like more DeFi, right? But like that's not like something that's going to drive massive volume. So it's like you actually have to find like the utility. And so like our general north is like if it can't be accomplished otherwise without tokenization, then that's a really good model to focus on, right? So it's like it's opening up new use cases and solving direct problems. So that's why instead of just like, throwing everything that we could potentially find at the chain and just kind of overloading it with options, which isn't like necessarily a terrible strategy, I guess, in crypto, but like, it needs to be very focused for like, we want to be here for 10 years, not for a couple of years or for one cycle. We want to be here for 10 cycles, right? And we want to really integrate into the best use cases.
And also,
So,
yeah, and also, Simon, you know what it is too, is that the
Did we lose him again?
Yeah. Big cliffhanger. Simon, I've got a secret. It just cuts out.
Yeah, classic. But what were you gonna ask, Simon? I think you're gonna ask something too, and then Danny starts speaking.
No,
he's back.
Can you guys see? That's hilarious. No, the other thing I was mentioning was that the quality of the assets that we've been able to identify is also a big focus for us because, like we said, we want to highly due diligence these assets and really create that framework, right? So that you have the most attractive product out there for the investors, and that being able to start by targeting the investors first and knowing what they want gives you a good warm entry point into the market, so that it can because how's the market really gonna kick? It's gonna start with the people that are highly invested into acquiring these assets, and then they're gonna set the standard, and then from there you'll start getting that layered out. So what we want to do from the beginning is we want to make sure that with all the challenges that we've seen in the market in terms of RWAs and right protocols and correct due diligence and whether assets are actually worth what they're worth, that's been our real north is taking some of our TradFi experience and really being very diligent in terms of the DD that we do and making sure that these assets are premier. Because we also believe that the higher quality of the asset, the more commercial appeal you're ultimately going to find. Because the market's looking for high quality assets that are real and whatever they are, they want value, and we want to provide that to them.
And to be fair, like RWAs are so important because I think like the future of DeFi is 100% going to be linked to RWAs because like I mean as Vitalik talked about for some time, like he had this whole complaint. It was like this whole DeFi ecosystem we've built is an Ouroboros where basically a snake is biting its own tail because we have these inflating assets. We have this financial system built on these sort of inflating assets that don't have a heavy amount of cash flows. I mean, we've got trading volume, like trading fees, perp fees, interest from lending and borrowing, maybe funding rates. That's only just sort of come in from, being able to bring centralized exchange funding rates on chain through like a theme and things like that. But besides from that, there's limited cash flows to many of these assets. And so like how are you meant to build yield protocols, how are you meant to build like vaults, how are you meant to build any of this like financial primitives from the web 2 on assets that have kind of limited cash flows or on top of limited cash flows. So we need these cash generating assets so we can actually build out this wider financial system of DeFi. And so I think that's going to be really important. We're going to be talking about RWAs more over the next couple of weeks, got some educational stuff to come out on that. But I think that's really cool. And I think your approach is the thought process is really important for adoption because I think cryptos, in some way, the current state of cryptos had many things backwards. You've obviously the infrastructure side that's been building out to be able to enable a lot of like use cases. On top of it, like Cosmos SDK builds tech that enables you guys to build a chain that can kind of power what you need. But there's been a lot of this focus, which has been super, I guess, like isolated to like, hey, we got to build for these crypto users that are like probably what like really 50,000 real users in crypto probably, or maybe a couple 100,000, and expecting that people are going to release these products and they're going to be targeted to these users that are currently in the space with no real new users coming in and everyone just chasing narratives. Whereas your approach is like, hey, let's take the technology, let's run this like a Web 2 company. They're using blockchain. and ideally tap into some of the liquidity in the space. But the liquidity outside of the space is a lot more than the liquidity in the space. And create like the utility to the people in the real world that actually need what we've got. We're not just building something on blockchain for the sake of it. We actually, this is a need that people in the market really have for this stuff. Let's actually create this, connect these guys, and then use blockchain to tap it in and actually create a market. I think it's a much better and a different approach to the current approach of like, hey, let me launch a layer one and kind of not really have a product or a vision or a differentiator. Do raise a bunch of money, do some airdrop farming, point programs, vanity metrics farming to farm a bunch of people that are really users. Use those vanity metrics to raise a ton so you can target the people that are in the space to buy your token, which, you know, and then so your VCs can dump into them, and then you're not really building or launching anything of value. And I think that's what's currently been happening for a long time in the space. And so I think this is refreshing in terms of that different approach to um, let's let's actually solve these problems in the real world and use blockchain, which I know a lot of companies are doing, but it's good to talk and bring this into the open of like, yes, crypto is moving forward despite all the grift and the memes and whatever it is. There is actually areas in the industry that are moving forward and using this technology in a real way. Sorry for
Well,
that
you know,
ramble.
No,
no,
that was a
no,
perfect
you're
articulation of
of what we're doing.
verbalization of what we're doing, and way more elegantly spoken than how we've been normally saying it, which is just like everyone in Web3 competes for the same user base. We're like, we're trying to build for the real world here, and just to touch on that, like when we started trading, it was like, and we launched KeyX and we started really moving with Kiichain. It was in 2020, in 22 when like the market was really hitting into the crypto winter, and our volumes were just going up. Like, it was like we went from like 1 million in 1 month to 20 million in month 3. And we're like, and we were just,
And trading, yeah.
yeah, and trading, and we were beside ourselves in happiness because like we found a model that worked. And so, I think when you tap into like the necessity of the tech, not just the vanity of it, there's no cycles. There's no
Yeah,
cycles.
yeah. The other thing I think that Simon really hit the head is that our vision for this thing, and a lot of it has to do with the fact that we come from emerging markets in terms of our professional career, and obviously me from my family. And the most exciting thing about this type of technology is the real world use case, is creating real world value, because that's when the opportunities really become quite large and all encompassing, right? Because ultimately in LATAM and in emerging markets, crypto and blockchain are not part of the tech sector; they're part of the financial sector. You know, so they have real world use, real benefit, and that's only going to increase because the rates that the banks are moving are not anywhere near where blockchain and crypto are moving. Do I think there's a place for everybody, working, connecting together? Yeah, of course, for a lot of simple things of simplicity and just call it reinforcement, like Alex mentioned. Like, the users in LATAM, they love the benefits of, for example, a DEX, but they don't want the front end of a DEX, right? So it's kind of those things. It's where you want, and that's why we always say that, like, our whole focus is always users and real use case, right? Because the biggest attraction is when you can create real world value. That's when this technology really starts like taking shape, and you really start impacting markets in a positive way. Because the simplicity, obviously, with transferring like USDT in order to purchase commerce, at the port versus an ACH is like, I mean, if you see that live, you laugh, right? Because you got people waiting in line for their transfers to clear so that they can get their shipments out. And then you got an 18-year-old like, hey, did you get it? Yeah, I got it. All right. Out. Like, so, it's like boom, boom, boom. You see these things at the port. And then, and for us, like Alex was mentioning, a big thing for us is like, we realized that in the space, nobody had really targeted the institutional clients, which are the largest clients, and they're more web, and obviously they're Web 2, and their mindset's Web 2. So it's easy to get them to understand the value, right? Um, but it's really about opening up those options for them and explaining to them how you can make their life extremely easy. So in our case, and in LATAM's case, it's stable coins to local fiat, right? But what we're seeing as the global win-win is that international investors and liquidity providers and blockchains that are focusing on acquiring those RWAs and bringing that kind of investment on chain, those are the ones we're partnering with. And they're really looking for a strong supplier of RWAs rather than having to kind of, what you said, Simon, kind of like you go out there in the market and see what's out there, What you really want is you really want to partner with the equivalent of like Century 21, right? You want somebody that that has the best assets, there's no hidden surprises. Everything that's on chain is correct. So in a certain sense, our big thesis with everything has been, create real value and deliverable value in terms of documentation and all information regarding the assets, and really create the benefit for the asset holder, which is to access international liquidity for either sale or growth of their assets, and the win for the international liquidity providers is to get them those emerging market returns that everybody loves, And I always tell the market, I go, in general, you can see, in the States, secure money will get you 3 to 5% a year, right? In LATAM, secure capital will get you 12 to 15% a year, right? And that's just the reality of the market. So being able to connect those pieces really creates like a win-win. And with the strategy that we mentioned, we think we can develop something in scope and size that can really make an impact.
That's really interesting. It's kind of funny how you mentioned like this UX of transfers, because I live in Indonesia, and when I set up a business bank here, I used to think that crypto MetaMask US was terrible, and then I set up a business bank here, and then I realized it's like, okay, I've got to log into this app and I've got a token and I got to press these like things, and then I can't it's like everything's a query. Even to check my bank, like the bank balance, how much money I have in there, it's like going back to Stone Age. And you're like, I have to log into 3 different accounts just to make a simple just to add a contact in or to make a simple transfer, and I got to enter PIN codes and do all this sort of stuff. You're like, dude, like people do this on like a daily basis, and I'm sure it's even worse on the TAM. But then I also think from the perspective of Uber got this right, like Uber and these kind of apps, so everything was like saving people money, making people's life easier, or like really saving time, right, or effort. But crypto, like a lot of developers and builders in crypto just never got this part of they're like, oh, we're going to build this thing, right? They're going to build this tech which makes people's life 10 times harder, and they're like, it's self-sovereign, but you control all your own money, and they're like, people are like, I don't care. I just literally want to be able to do this, and I'm not going to do it because it's too hard. So I think the mindset shift is what you said was really key here, and we talk about and think about this a lot, even in some of the upcoming products that we're working on at the moment, which is how do you bring the benefits of blockchain to the people rather than constantly trying to onboard people to blockchain. Everyone's like, yeah, Base or Solana, we're going to onboard all the millions of users to Solana. And you're like, no, you're not. No, you're not.
The way you onboard them is not let them know that they're being onboarded. And a lot of it, and the way you're seeing it is what we're doing. For example, our centralized exchange will have the DEX features, right? But always give you the centralized attention, right? And wallets are also doing that. That's a great point that you just mentioned. There's a lot of wallets that are saving in USDT, but on the front-facing front-end user experience is USD. It doesn't tell you you're doing it in crypto. And that's where we're realizing is how you onboard these users. You onboard these users by giving them what they want. You know what they don't want? They don't want a lesson in blockchain. They don't have a lesson in crypto. They want to know, why do I use this? And you use this because in the wallets instant, hey, you can save in US dollars. Great, love that, right? And that's a big part that we've identified. And like I said, and that's been mainly by talking directly to users, because whenever you talk to people that aren't in crypto and you tell them the benefits, you will get 100% exception rate, adoption rate. As soon as you explain to them what it does, they're like, all right, good, I gotta go to work. That's a lot of people, they just want the use. And I think that's been our biggest growth factor. I think speak about this with Alex a lot, is that the fact that our focus is use first, right? And then from a personal standard, we have a huge high regard to the highest level of tech possible. I think those two healthy combinations allow us, one, to really develop and create on the tech side and really be pushing the envelope on that side. But at the same time, understanding who the users are and what you're ultimately giving them, and what you're giving them is use. You're giving them as benefit and knowing who they are. Alex made a great point. You don't go sell tokenized Apple in Miami, right? Apple stock, right? What you do is you go sell tokenized Apple stock to the banks that we've done partnerships with, whose users would love access to it, but they're never going to open up the traditional channels. Those people are seeing a huge benefit. So it's really about making sure you apply the correct use case and benefit to each part of the market. And also, the bottom line is that I always say this. I always get a big applause about this. And it's blockchain was built for emerging markets. It wasn't built for the states, right? The states can obviously, the U.S. can obviously benefit from it from a technological standpoint and from like the innovation aspect for sure. But as far as use, it's emerging markets. I mean, we talk to our partners. We're very close to one of the largest family offices out of Pakistan, and one of the things we all laugh about is that when you're part of an emerging market, like you understand each other so well because we all deal with the same devil, right? Which is like the archaic banking structure, the protectionist culture of the financial system, the lack of liquidity in the market, and you can see it just by the stats. I mean, internationally, banks make around 8 to 9% IRR. In Latin America, they make around 30%, right? So that tells you where all the growth liquidity is basically getting positioned, right?
Makes
And
sense.
and one thing I wanted to mention to you guys, because I this stat to me is mind blowing, and it was one of the biggest surprises that we got in our favor, was that if you look, people correlate in LATAM adoption rate for cryptocurrency and adoption rate for tokenization like par, right? Which is still one of the highest globally, which is around 20%, 20 plus. What we found in the market is that for tokenization in LATAM, the adoption rate's like 200%. It's not 20. It's like 200%. And the main reason why is because when the banks started going south about 30 years ago and they stopped playing their traditional banking role of providing liquidity to the market, funds started entering the market because international funds realized, hey, LATAM needs liquidity. We can come in and there's a lot of deals to be made. So users started doing business with funds. Then after funds, fintech companies showed up and they start providing these products and services that users could start benefiting from because, again, the banks have fallen behind. And then when crypto and blockchain came around, it was kind of like the holy grail because they said, wait a second, this doesn't just put a Band-Aid on this thing. This thing cures the disease, right? Like to a large extent. So they're like, okay. And then now when we present a tokenization, what they see tokenization as is this is the next financial instrument for international liquidity. So it's an instant connect, from a conceptual side. And these are people that are older that have no understanding of crypto or blockchain, but they understand what it means, right? So and that has really sparked why we're putting up the numbers that we are. I mean, I had, this week alone, we had 27 assets come in to be tokenized and commitments. Obviously, it helps that, the phase that we're in right now because we're walking this thing out with it. So everybody wants to jump on board because obviously, as this thing grows, it's starting to catch fire. Like other funds are speaking to each other. We're making a good amount of waves in the right circle, so things are really speeding up. But the adoption rate is very high. I mean, people conceptualize tokenization very well, regardless of their understanding of the tech.
Nice. That's amazing. I know we're from a time perspective. I know we've had a good run already. I think it's like we could talk about, as I said, what Alex said before, we could talk about this forever. I think we've got a lot of content snippets from this, to be honest with you. I think like even for you guys to use and in general, this is like really important. I think the one challenge with all of this, and maybe we could just like tie it off. Maybe we've got a couple questions we can delve into just over a few minutes. But I think the one challenge of this is how this gets like filtered then into the wider market, like how you kind of tie the existing blockchain base with this stuff that you're doing, because you're obviously doing all this stuff that's happening behind the scenes. how to, get more exposure on this so that people understand what's really going on. Because I think the market's kind of gone off its own direction a little bit, where, yes, people talk about DP and RWAs and all these things, but meme coin market, there's all this nihilism in the space of people going like, what does any of this mean? And so maybe there's some inspiration to be found here around like a spark of like, this stuff is actually happening, but you don't see it. And how do we bridge these worlds? And so people really start to understand the bridge between what's happening behind the scenes, right? And what's actually, the technology is actually being used, right? Like this.
Well, Simon, one simple word, and it's our north: transactions. So that's why we're focusing on one, tokenizing assets and letting every single asset we tokenize, we're marketing it, we're letting the community know exactly what's happening so that they can see the sheer volume, both in value and in size of quality of assets, and getting those assets to actually transact, getting our liquidity partners to buy those assets, the asset holders to either get the capital to grow, whether it's projects for hotels, developments, or just purchases, whatever that might be, and then just hit that volume, right? Because our main focus point is between the strong due diligence that we have on the assets, the high quality assets, and the strong international liquidity providers. They're going to be the original spark of being able to get transactions done. And then when the markets, and that's the good thing about Kiichain and Key and Global, is that what we're doing is we're solely focused on real world value, right? So we're where blockchain meets business. Like what we do really creates value. So it's not hard to understand like where the value points are when you look at the ecosystem. But the number one point, and I think it's super important that you ask that, is how do we get them to go? We get them to go by showing them that these individuals tokenized their assets, went through due diligence, found qualified buyers or investors, put the market out there, and the system actually worked. They were able to get their liquidity for growth or sale or whatever, and the asset provider gets the benefit of the liquidity. The liquidity partners get the benefit of emerging market returns, getting those outsized returns, and that it's actually happening. Because one thing I've noticed is when it's too good to be true, but it starts to happen, people start doing it, So that's our main thing. That's our north.
And that will roll out over time, right? More of this stuff will come out. I think you get a lot of this stuff that happens. Like, I think you see like RWA success stories in the space that are like, people don't hear about them and then it's all in one go, and it comes out and then people go, okay, this is something that I've got to pay attention to. And I think I noticed even with like, if you look at DPN and a cash and, they were building for a long time, they were there, they weren't noticed, and then suddenly just kind of hit the scene and I was like, okay, crap, stuff's happening. So I think that's really key. No pun intended. It's just like, look, this has been an incredible space, incredible AMA. I look forward to doing more of these. To be fair, I think we've got some brilliant content from this for you guys, for us. Really looking forward to educating the community a lot more on RWAs and Kiichain. Just maybe to leave this space to tie things off a little bit. For those in our community out there, I know there's a couple questions. I think they were more generic questions and we're sort of a bit over time, so maybe we'll like skip over them. But like, how can people get involved? How can people participate? If you're someone who's like listening to this going like, wow, this is incredible, I love what these guys are doing. What are some ways that people can kind of follow your journey, get further involved with Kiichain? What is the next step that people can kind of take to, both on the like actually seeing like all this stuff that you've mentioned, like being tapped more into it, but also participating, contributing, getting involved?
Yeah. So, I mean, apart from just like following and joining our socials, join our Discord, follow us on Twitter for like all the updates, but we run like a testnet at kiichain.io/testnet. And then we'll be featuring most likely very soon, like all of the project's protocols on chain tasks that we have within the ecosystem during this next kind of hype period before we start mainnet. So like, obviously within that, the DEX features, KeyX, you can create an account and join us at KeyX and then join our community. A lot of like products that we're like building that our tech team is kind of working on every single day comes from community as well. So like a lot of partnerships that we make with whether they're local banks or local, fintechs or whatever, asset holders, local companies, even in the Web2 space, we always listen to like what they have to say. I think more so, hopefully more so than others, and really just try to understand like what are the use cases, what are the problems being solved there, because we want to really just build stuff for the community. Like if enough people, enough members in the community want it, then there's probably a use case there, and we should focus on that. So I think those are the places to start, but also very being super communicative on X or on Discord. Like Danny and I, we both see all those messages and see all those chats, and oftentimes we create these group chats with our user base just to kind of get their feedback, get their opinion when we're working on stuff. But yeah, those are the our testnet active page. You can use a lot of our wallet infrastructure, sign up for an account at KeyX.
And definitely, and 100%, definitely join our ambassador program. I know we've gotten a lot of questions every time we do these spaces and everything, that we got a lot of people reaching out about that. We're unveiling that, so definitely inviting everybody to jump on that, because it's a full team effort. So we'd love to have ambassadors come on board and really be a part of everything that we're building.
Amazing. Di, do you want to end anything? I know we kind of like hijacked the hosting a little bit, but do you have anything you want to add?
Yeah, I think that's this was a fire conversation. RWA's financial inclusion, everything. Yeah, huge shout out to our guests from Kiichain today, Daniel and Alex, dropping like on the palm today. Thanks, guys.
Thanks everyone for having us. Yeah, excited to do another one in the future if there's
get the emerging markets thing as well. I think we're all kind of we all live in some kind of emerging market somewhat, so we all get some.
Yeah.
We've all
big news coming. We got big news coming, so it's gonna be exciting. Next couple of weeks, we're wrapping up a couple big partnerships and big things. So I think our next conversation is going to be quite robust. Especially, it's going to be great for everybody hearing this to really see the transition, because one of the big things we like to do is to show the consistent growth with everything that's going on. And 2025, the growth is just going through the roof. So very happy.
Good stuff, guys. Keep hustling. Look forward to it. There's a replays again of this is live. Is on Twitter. It's on YouTube. So might chop this up and make some good content about it. But thanks for jumping on. Thanks for taking the time, guys. I know it's the start of your day for you guys. So have a good rest of the day, and I look forward to hearing some more news and following the journey.
All right.
Absolutely. Take care, guys.
Cheers.
Appreciate it. Thanks a lot.
Yes.